Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of the NASDAQ index on February 11th. We're on the daily time frame, and we can see that today, after about 0.8% fluctuation, the price is currently around where it started at the beginning of this week. Although this week the price of this index has experienced a lot of volatility, its direction still hasn't been determined. On Monday, we saw that after a decline, the price filled the gap from the start of the new week and then bounced back up. We're now on the 4-hour time frame. After a price drop and a reaction to the 24,200 level, the NASDAQ made a strong upward move in the last trading days of the previous week. As a result of this move, two FBG zones formed at the prices of $24,560 and $24,925. After the start of this week, the price dropped down to this 4-hour FBG, and after filling this zone and reacting to it, it bounced back up. Following this rebound, we witnessed a market structure shift, meaning a change in the market structure, as we can see that the price is now making higher highs and higher lows. As the US dollar continues to weaken, this trend should lead to an increased appetite for risk and a steady inflow of money into stocks and investment in various companies. However, one of the main reasons for the dollar's weakness was the weak release of retail sales data, which could also have a negative impact on stocks. Among other significant and influential economic news reports affecting the NASDAQ index are the latest United States employment and labor market data, which, if released considerably weaker than what analysts had expected, could also potentially trigger a notable decline in this index. In addition to these factors, some of the major companies in this index have announced that they intend to spend a significant amount on AI-related infrastructure within their own companies. This caused some investors to doubt the profitability of this move, and the overall upward trend that the NASDAQ was experiencing came into question. At the moment, we can clearly see that the long-term trend of this index has remained upward, but in the short term, there is a possibility of price declines and deeper corrections. For this reason, we are mostly trying to enter sell trades during short-term upward movements that lead to liquidity accumulation. We are currently on the 1-hour time frame, and we can see that the price, with its upward movement, collected the 1-hour FBG at the price of 25,322s. Then, after reacting again to this area, and also to the 1-hour order block at 25,364, it showed rejection and moved downward. In its downward movement, it created a new low, and as you can see in the last few candles, it swept that low. With the candle closing within the previous shadow area, we had a Soldier Ryan strategy, which meant we could have entered a trade on this candle. Our stop loss is set below the sweep candle, and we can enter the trade aiming for 1-to-1 and 1-to-2 targets. But as I emphasized before, for the short term, we are currently looking for more bearish setups on NASDAQ. So, as a setup, we can enter a sell trade by targeting the previous highs, such as the price of $25,260, or even a renewed reaction to the 1-hour order block, aiming for the previous lows at $25,116, or even $25,000. Wishing you success and profits.